Hello, everyone, and thank you for joining this monthly webinar, Crypto Market Debrief, hosted by CEO of Blockchain Expert, Stanislas de Quénetain, on the Zoom Blockchain at HEC. So I'm Maxime, I'm a member of the core team of Blockchain at HEC, which was created in 2017 by David Servet, and which aim to share knowledge on the Web3 economy, blockchain, and to connect ecosystems. I'll moderate this session with Dimitri, also part of the core team. So first of all, let's warm thanks to our prime sponsor, Stake Capital and PwC, as well as our partners at HEC Alumni and HEC Paris, and all the 90 speakers and companies who have already come to shed some light on the world of Web3. I remind you that we have 1 to 2 to 3 conferences a week, and the next will be a round of table on Wednesday, September 28th, on sustainability and blockchain with 4 incredible Web3 experts. We will also have this week the 4th episode of Blockchain Skills and Jobs, the conference where we give the floor to Web3 recruiters, candidates, and trainers. So I strongly invite you to register for all these conferences, which are free and available to all. A link will circulate in the chat to register. To come back to today's subject, we are very happy to welcome Stanislas de Quénetain, who, like every month, presents the weather forecast for the cryptocurrency market. No need to introduce it to you. And we will have 2 blocks of 30 minutes, maybe 40 minutes. We want to make this actually very interactive. So please share your question in the chat, and we will try to interrupt Stanislas a little bit to ask your question. It seems like it's going to be very technical, so really don't hesitate to ask any question, and Stanislas will be really happy to answer you. And at the end, we'll keep to 15 minutes for more questions. All right, thank you very much, Stanislas, for being with us this evening, and the floor is yours, and I wish you an excellent conference.
Thank you very much. Very happy to be here. So I'm going to, so feel free to interrupt time if you have any questions. I think it's a good way, because I don't know how it's gonna last, but how long it's gonna last, but if you have any questions, I think the good way is maybe to interrupt. So I'm going to share my screen now. Just give me a sec. And so what I want to do is maybe to start having a quick recap on what's happening on the market, because as we've seen, and since actually the bull market of 2020, institutional investors came in and investing in cryptocurrency. Sorry for my English if it's not perfect. I think it's going to come back while I'm presenting. It's going to come back, but I'm not used to. I mean, I'm not talking every day in English. So what I'm saying is, in the previous cycles, we didn't have so many institutional investors. So that's pretty new in this last cycle. We are in the bear market, as you know, since November 2022, 2021, and we're in the bear market. But many institutional investor came, and for this reason now we have a correlation between a very strong actually correlation between BTC and the other risk-on market, the other risk-on assets, of course, like securities, so the Nasdaq and S&P, they are extremely correlated at the moment. So when S&P goes down, crypto as well, and that's why the macro picture is very important at the moment, and that's why we are very focused on it at the moment. But before this cycle, we saw that maybe crypto could be decorrelated, and that was pretty much the case, but not anymore. And for now, actually, maybe it might be changing in the future, but for now, it's not the case. So if we have a quick look, I think you can see my screen. I'm just going to show you. We have been here since, so that's March. we have this since November 2021. We have been in a bear market. It's just to picture where we are now. We are just we came back in the round here. We are we are moving from one round to the other one, and we are usually staying in it. So we are actually, that's my belief, but I'm not, I can't be entirely sure. We're going to come back to the bottom of this round, maybe lower. That's what happened in the past. Usually, we can see that here in the in the crash of the May 19th. We had the range here and here between these two, and we had two fake outs here and here, and before we moved north. But what I think is, I mean, for now we are in the round, so it's very difficult to know which side we're going to go, and that's why we need to look at macroeconomics. And for now, the S&P is very close to what happened in 2008. I like these charts because it just compares how similar they move at the moment, and we are at some quite important. If we look at the S&P, we are at the moment. That's a very important, as you know, area for the S&P. If we go down, we might.
The resistance, maybe. Yeah.
Sorry
to interrupt you. The resistance, maybe, if I'm not mistaken.
Yeah, resistance, exactly. That's the word I'm looking for. Yeah, it would be much easier for me in French. Sorry, I don't have all the words because I usually do all the all the presentation in French now. So we have a very strong resistance, and we might see some downside if and when actually this resistance is going to be broken, and we can see the VIX going up, which is a good. I mean, it's a sign that volatility is coming and downside is coming as well, and we're going to see it coming. Growing a bit more. We have also the DXY, so the dollar index, which is also climbing, as you all know, is going extremely fast. I don't know if you're aware, but the relationship between the DXY, so the dollar index, with cryptocurrency is very so they are inversely correlated since quite a long time. So the DXY has been moving in the range for some years now. Maybe since 2002, as far as I can remember. No, even further. But we have here December 2016 is the bottom of the second cycle bear market. Then we had beginning January 2018 is the top of the bull market of 2017. Then we had almost day to day, we had, the 20 March 2020, we had the COVID crash, which is the beginning of the last bull market and the end of the other one. And we had, May 2021, we have the top of the crash of when China said that they wanted to ban mining. And then we had, this explosion of the DXY, and obviously for risk on assets, it's a really a bad thing, and that's why lots of people are saying that the bear market for this cycle started in May 21, even if we had a higher high in November 21, sorry. But so that's the idea. So we have the DXY growing up extremely fast due to European currency and the GBP, the euro, and we are just going down extremely fast. The yen is just surviving because of all the manipulation of the Bank of Japan. But it's not going to last, according to most people. So we have a DXY is growing up extremely fast, and if we have a look historically, when we have a DXY like this, it's growing extremely fast. That's in the past we are now 114. It can go to 120 very easily. I mean, the way it moved, actually, it can climb extremely fast. And we had usually global recessions. I mean, that's pretty. It's been. I mean, it's always been the same in the past. And the thing is that we have also different, we have, you know, all these all the alarms are on the red at the moment, because we also have, well, of course, the Fed is raising all the rates so extremely fast. It's the fastest way we've seen in comparison to the previous cycles. You can see we are in these cycles, and in 6 months we moved to 3%, and you know, it took at least 18 months in 2004, 15 months in. As you can see, it's going extremely fast, and it's not going to last. It's going to last till actually May. So that's the future forward, the Fed fund future forward, which tell us that the market is pricing actually the Fed funds at 4.61% in May. So basically, what the markets tell us is that you know, the funding rates are the Fed funds are going to climb till May 2003, and it's so we haven't seen the end. Of course, it's to answer all these inflations that we see everywhere around the world. So that's 8.3% in the US. That's 7.9 in Germany, but with a PPI of 45, it's going to increase even faster in the coming months, apparently. If we go in Europe, we have inflations everywhere, and obviously the ECB has also raised these the rate starting after the Fed, but still to 0.75. And I think the euro, that's also why the euro is going down. It's because, I mean, the recession is even more, it's coming faster, I think, in Europe for different reasons, obviously for the energy crisis as well. So we have all these red flags. We have a bond market as well, with going down. You know, we are at the end of a cycle. I don't know if you read the Redal.io, but I think I like what he says when he talk about the long-term debt cycle. I think he's pretty right. But for now, I think he's right. And we are at the end of you know, now we have the yields on the bonds that are climbing extremely fast. So we have everything is collapsing at the moment, and that's also why actually the traditional 60-40 portfolio is one of the worst year since 2031, I think. So everything's going down, and obviously it's not really good for cryptocurrencies. So that's why, we are really following you know, these markets. Maybe one word also on the bonds. You know, when we have these the curve, this bonding curve. It's not the bonding curve. That's the what's the name again? But that's the curve actually. When you have all the rates, you know, you have 30 years US treasuries, 20 years, 10 years, 7 years, and usually in normal market conditions, we have these rates are usually, you know, this is a normal curve, because, and that's pretty normal. When you lend for 30 years, the rates are obviously more important. And when you lend to the United States for 2 years, obviously the rewards are lower. That's normal. But then when this curve is broken, which is the case at the moment, because the 30 years bonds rewards are lower than the 2 years, usually we have a recession in the 6 months. This is what happened here as well. And you see, we had it's same here, and we can see exactly the same kind of configurations. And we have this kind of very important market corrections. So this is the S&P. So this is why we expect a lot more downside on the S&P market. I mean, this is what I think, and I can be wrong, of course. But according to all this data, and this is only the most, I mean, the one that everybody knows, this is pretty clear that the S&P has more downside. And when you see this kind of correlation, we have more downside possibly with crypto, even if they already had lots of already had a lot of downside, but this is a possibility.
If I may interrupt you here, we have a question from Eric. Do you think whales are trying to avoid BTC exit from Rainbow BTC chart picture? And if it was the case, it could create a big mess in valuation expectation.
Sorry, what do you mean by that exactly?
So Stan, I take the I stand. Thanks for the explanation. Do you know the rainbow chart?
Yeah, of course.
On Bitcoin, I think the Bitcoin price is at the bottom of the rainbow, and I have just a question: if maybe the whales are trying to avoid that the price is output from this rainbow chart.
Well, to be totally frank, I don't use. I mean, I have it somewhere, but I don't use it a lot. This rainbow graph. Also, it's been proven in the previous cycles. I don't think we might have yet a bottom. Then that's fine. You know what? The whales have been accumulating since the end, since the top. I mean, they are just they have been selling here, and they're just starting accumulating. I have some on-chain graphs. Then you can then I'm going to show you because according to these graphs, we are not at the bottom at the moment. But that's interesting what you said, because we recently saw some move from these whales. They just moved an important part of BTC that haven't been moved for a very long time, and this kind of move that you see that. Do you see my mouse or when I move?
Yes, we can see it.
Okay, great. Just to check, when we see this kind of move, from BTC, these BTC haven't been moved for a very long time, and we can track this through the UTXO, and we're going to see another one using this UTXO, and this is very useful because when we see this kind of BTC moving on chain, usually there is some volatility on the market. So it might be usually here it's been downside. It might be also downside. We don't know yet, but it might be additional. I think the whales are using some area to accumulate, and this area, when you see the realized value, for instance, which is the average price of buying of these Bitcoin. You have for everybody who's buying Bitcoins, you have the average price, and this is called the realized. There is a cost-based value and realized value. So there's two different things. But when the price of Bitcoin is below the realized value, this is usually accumulation area for the whales. So we are definitely in this area at the moment, and whales are clearly accumulating at the moment. And we have lots of charts showing this. Actually, I could show you that. I could show you that. But at the moment, what's interesting, this is the cost basis I was talking about. This is the price at which short-term holders have been buying on average. So that's 24,000, and long-term holder it's 33. So when both these these two lines are crossing, usually we have a bottom. We are not yet there. So according to this metric, we could see some downside and a bit more. So maybe the bottom is not there yet. But that's we definitely track long-term holders and short-term holders on different metrics. I don't know if it does answer your question.
Yeah, excellent. Thank you.
So as you can see, we have a Bitcoin here, and I can show you other graphs on the cycle of this of the Bitcoin. Just give me a second.
Yeah, actually, many people in the chat are very interested about those charts.
Yeah, you can go to look into Bitcoin. You have different. You have Glassnode as well, but Glassnode is You have to pay to get the full access. For look into Bitcoin, you have lots of information, and you can, this is the stock to flow model, but you know this one. Just to give you a little insight, but I'm sure you all know this. We have some halving with the Bitcoin. The halving is when the paying of the miners is divided by 2. So every time a miner adds a block to the blockchain, they get 10, and at the moment they got 6.25 bitcoins. But just before that, before this date, they had 12.5, and before they had 25, and then 50 here. So every 200,000 blocks, then the number of Bitcoin that is created every 10 minutes is divided by 2. And historically, it created a very strong bull market because of the rarity of this from one day to the other. The amount of Bitcoin that is created is divided by 2, and that's very powerful. We have another one in 2024 in May. So the bear market could last quite some time still. We had the end of the previous cycle bear market was in the previous one was in you had the COVID crash here in March. You had the halving here in May. So we still have some time to get a bear market here, and that's also why we could see some downside. And maybe exactly the same way as here, we could have some relief rally and then back again before the next halving. And maybe this cycle, the halving won't be as impactful as it was in the past. But so that's why we talk about cycles. We had 3 cycles here, and all these cycles were generated by these halvings. So that's interesting to to picture the different cycles. There is another one I would like to show you, which is quite interesting to. So you have the MVRV is interesting because it's you have the market value. This is the market value to realized value. Actually, with the market value is you take all the Bitcoins that have been created since the beginning, and then you multiply them with the price, the actual price. So you have it's not a very accurate value for the network, because there is around 3% of Bitcoin that have been lost, definitely, and that's why we also use the realized value, which is the other part of the equation. And the realized value is you take the price of the Bitcoin the last time it moved. Okay, so for instance, if the Bitcoin moved here when it was I don't know when it was 1,000, it's calculated at this price. So you have a much more accurate price of valuation of the network. So that's why we usually consider that the MV, the market value, the market cap is very speculative, and the realized value is much more accurate. And we have here. So this is the formula, and this ratio was very interesting because usually when we arrive in this area, we usually have some bottom. Same here, but if you have a look at this area, we are not entirely at the bottom. So if we just have a look at the previous cycles, we have some possibly some downside on the Bitcoin according to this indicator. Mm-hmm. So that's there is lots of indicators that tell us that possibly we haven't seen a bottom. Also, we also have some indicators that tell us that we've seen the bottom, especially with I'm not going into too much details, but it's this is something I use a lot of.
Sorry, Stanislas, in the meantime, could you
Sure.
explicit, please, what do you mean when you say when Bitcoin moves?
Yeah, it's just the last time the Bitcoin was transferred from one address to another. So they just take the UTXO. which is the actually this Bitcoin is one UTXO or several UTXO that you take and you transfer to another address. And you can, with, you know, the blockchain is totally open, so you can access all this data, and you can tell exactly when one Bitcoin moved and at what price, and this is what we are actually focusing on, instead of using just, you know, the price of all the Bitcoin and multiply them with the actual price. So yes, you have so many you have so many indicators. Well, these one are pretty straightforward, and that's a very good start actually. If you want to have a look, you have the old waves, but I'm not going to go into these details. I've been following them for 2 years now, and you know, every week. So you were referring to this, I guess, a bit earlier, but I'm not really using these graphs. And actually here as well, it's not really at the bottom. If you have a look, in the past, we had, I think we had some, yeah, but I think from what I don't give any financial advice, but what I usually recommend is to do some, you know, dollar cost average. We are in areas where you can start, you know, accumulating, even if you don't have the exact bottom, you can start every week or every month, start accumulating, because it's definitely a good area. And you have some, you know, you have some altcoins which are already at the bottom, especially the very small one, you know, that I recommend, or that I have a look every week. But if you look at Polkadot, for instance, dots, you know, just need to go to the maximum. You just sorry, my internet's not really fast. Enough downside. You know, yeah. You know, this kind of altcoins, they've been, you know, 80%. It's like a standard in bear market, in crypto bear market. When we go to 80 to 90%, yeah, I think I consider it can go a bit further down, but it's a good point to start accumulating, to me. I mean, for these blue chips, crypto, Polkadot is one of them. Of course, linked as well. So 90%, you know, so you are not making any major mistake if you accumulate and you keep them for the next for I mean, for the time of the bear market until the next bull run. So I think it's a good time to accumulate. Then you have different categories. I can take you through these. So we had the relief this week. But let's see what's going to happen in the next 2 weeks. I think we're going to see more downside on the S&P. XRP plus 16%. I don't know if you've seen the news, but they are about to win against the New York Court of Justice. So they have been sued by the New York court, and apparently they are about to get to win the case. So that's pretty bullish for them. Cardano just released the Basili upgrade, but doesn't make any change. I'm sure you know that we had the Ethereum merge 2 weeks ago, and it's been seen as a sell event. So you buy the news and you sell the event. What happened next? So Lido has been extremely bullish. You know, this is the liquid staking. I think it's gonna be a pretty strong one, because in the new Ethereum, you have to use validators, and they are one of the biggest provider of validators, because you can, you know, lock your Ether in Lido, and then they provide you a synthetic equivalent that you can use. That's really useful, and actually they were not pegged to the Ether till yesterday or 2 days ago. That's pretty good, but that's also pretty dangerous, because, you know, we've seen that they can unpeg each other. So that's can be pretty. There's lots. I don't know if I'm going to go through all of them, but Stellar is also very interesting. It's interesting because of the XRP. Terra, I don't know if you've seen the news on Terra Classic. That's Do Kwon is in. There is a warrant, international warrant against him, so that's why I think it's gonna. It just climbed big because the Binance removed all the fees for the trading, and they're gonna burn most of them. So There's lots of news, lots of things in the at the moment on the market. So I don't know if you have additional questions on. We can see other indicators. I don't know if there is some question at this stage.
Not at the there is a new question. Sorry about that. I missed one. Two questions. So there was a question about if you could elaborate on why Lido is dangerous. And the second question was for new beginner investor in the crypto world, what are the criteria to take into account in the choice of cryptos? So first question about Lido and second question about criteria to take into account to buy cryptos.
Why? So Lido is a bit dangerous. I don't know if you know how it works, but it's you take your Ethers and you lock them in the protocol, in the Bitcoin chain actually, and so it's locked until Ethereum 2.0 is released. So it could take one year and a half more, and that's why Lido appeared. And what they are doing is they take your Ether and they give you what they call the staked Ether, which is the equivalent. It's not an Ether, it's a ERC token. This is the token that they generate themselves, and you can use this token and you can go on Curve Finance or any other protocol of DeFi on DeFi, and you can exchange them for another Ether. You can go everywhere. So they are supposed to be pegged 1-to-1 to the Ether, so the price should be the same. The problem is that we've seen that there's lots of leverage with these staked Ether for different reasons. I can go into details. I've done lots of videos on this, but what you need to see is the consequence was the price of the staked Ether was lower than the price of the Ether, and so that became a real issue, because if you have your 10 staked Ether, you can't get your 10 the real price of your 10 Ethers, and if you want to get your 10 Ethers back at the real price, you need to wait for 1 year and a half, and that's what a major issue. But we've seen recently that since 2 days they just repegged, and that's a good news. But we've seen the risk of losing the peg. And this was due to the Terra collapse, when everything was destabilized. The other risk, I think, and that's important to mention, is the number of validators that they have. Since they have lots of Ether, they have around 3% of all the Ether. They have a very important number of validator. You need 32 Ether to create a validator. So you can imagine the number of validator they have. And when you have validators, you have power on the Ethereum blockchain, and that's why you have clearly a political power. And that's the main difference between proof of stake and proof of work, and that's a very important difference. And that's also why, because we have Coinbase is also providing the same kind of services. Kraken is also providing the same kind of services, and all these players, they are based in the US, and that's why the SEC recently said that since all the validators, or the majority of the validators of the Ethereum blockchain is based in the US, then we're going to consider that Ethereum is a US blockchain actually, and it's a US network, and then they should file for the securities and on all the obligations that other securities have. So they're trying to use this path, So, but that's very important, and that's the other risk of Lido to me.
Yes, answers. Thank you very much.
On the second one. You can. It's a tricky question. I don't know. It depends on your risk profile. If you don't want to take too much risk, then the question is pretty simple. You need to focus on the blue chips. The 10 first on the CoinGecko list, and that's fine. You won't take any major risk. All these 10. Or maybe not the stable coins, but if you take Bitcoin, Ether, I would take Cardano, Solana, Polkadot, Polygon. then if you take all these one, I mean, you don't take any major risks. I mean, all these projects are massive now, and they won't disappear. So, and you can just buy them now and wait for 2 years, and you'll just collect your rewards in 2 years. I mean, this is my view. It could go very differently. I don't have any crystal ball, or I don't know what you call that. I don't see in the future, but the way it should be. I mean, if the cycles repeat as they were in the past, we should see another bull market in the future. Maybe not as strong as we've seen in the past, but we will see other bull markets, and that's basically what you need to do. I would recommend not to let them on an exchange, because you don't own them. You know, if something happens, they own your Bitcoin, they own your Ether. So the best thing would be to put them on a ledger or something equivalent, just so you're sure that you. But then you need to learn how to manipulate these vaults. This is not very difficult. But then if you want to go a bit deeper, I mean, if you want to find, you know, some tokens that are a bit more, I mean, they're not very famous at the moment, but have some potential, then you need to dig into this. This is what I'm doing every week. Actually, I've got a newsletter, and I dig all these tokens. I explain why I think they are important, and you can also stake them during this bear market. I think bear market is excellent. You know, it can be long, and if you stake them, so if you put them into, if you lock them into the protocol, I mean, if you accept not to use them for a certain period of time, then you get paid. You get paid in this token, and it can be interesting. I mean, most of the time it's 20%, and it's not that risky for the mining part. It's not that risky. The liquidity mining, I mean, which is in DeFi. When you lock your tokens in DeFi, that's a bit more risky, but in some protocol it's fine. I mean, it's getting, every day, every hack is getting more secure. But yeah, I mean, it depends on your risk profile. If you don't want to take too much risk, then just take the blue chip one, and that's fine. But if you want to learn, I mean, it's a long process. It's a very interesting process, actually.
Okay, I might ask one here. What would you say regarding what you just explained on centralized exchanges and not letting your cryptos there, regarding some membership offers that they have? I mean, if you happen to have run some cryptos and you want to benefit from what Binance offers to you with discounts, when it comes to staking, when it comes to cash out your crypto or using your Binance credit card, would you recommend in that case to keep some crypto on the centralized exchange, or still to keep them out?
Well, I mean, I don't give any advice. You're responsible for your kids, and that's the main feature of this crypto. That's you're in charge. What I usually say, what I'm doing for myself is I diversify. That's the only thing that can, you know, protect you at the end. There is no zero risk with crypto. There is so the best thing is to diversify. You can put some on Binance, of course, but and Binance is far more secure than Celsius. But see what happened with Celsius. Lots of people, you know, it was they were 20 billions market cap at I mean 1 year ago, and they disappeared now, and lots of people lost their money. I don't know, Binance, it won't happen with Binance. It's too big to fail, but you can see some, you know, there is going to be some change in regulation pretty fast now. It's going to come pretty fast, and so we don't know what they're going to decide about your crypto. You can definitely put, I have some on this exchange, of course, but I would also diversify in DeFi, so in decentralized finance, and also in storage. So you don't have to get everything in your place, because it can be also dangerous. But you can find a place where you store them, and but diversification is definitely to me is the answer, and diversification everywhere. So you don't use only one centralized exchange. You don't use only one. I mean, DEX, for instance, in DeFi. Yeah, I think diversification is the answer. what I thought could be interesting is maybe take you through these some news today's news about the crypto universe, because we had some interesting news today. I don't know if you're interested.
Yes, definitely.
And actually, we were talking about these the regulation that are coming, and we know they are coming from everywhere. Not only from the SEC and the CFTC. They've been pretty aggressive recently on DeFi, very actually aggressive. And we've just seen, the IMF would just, gave the FSB, so the Financial Stability Board. So they have the mission to provide some recommendations. That's what they do, like the GAFI, some recommendation, and they will submit them to the G20. But what they want to do is a global regulation, I guess, on crypto. In addition, I guess, to the regulation we have in Europe, in the US, and like the Stable Act, that like MiCA, and it's coming. It's going to be this 2023 is going to be the year of. Yeah, and it makes sense somewhere, because when you see Celsius and all these CeFi that were not regulated, and a lot of people lost their assets, and that's a pain. And we see that Nexo, for instance, who is one of the survivor of this CeFi area, they survived. Actually, they did pretty well. They are now starting to see some states taking actions against Nexo, because they are doing some lending. They give you some rewards on your deposits, but they also they're also doing some lending, and this is, I think, what banks can't accept, obviously, because this is their business model, and so they are starting to have troubles. So they will have to get a banking license pretty soon, and this is exactly what they're doing, actually, because they're taking stakes in different US regulated banks at the same time. But Celsius, just before they collapsed, had the same kind of issue, and actually Celsius just resigned. I mean, Alex Mashinsky, the CEO of Celsius, resigned today, and we also have Voyager Digital, which was also an asset lender. Who just been, all the assets have been bought by FTX, which is one, actually, FTX is one of the best of the great winner of this market collapse. After we also have these the ECB, who starts to work on the. They've been working on it for a very long time, but on the digital euro, of course, the CBDC, so the central bank digital currencies, and that's pretty interesting. The way they move, so they just starting, to communicate on this. We know that it's going to be for 2026, apparently. 2026 we should have a digital euro, for that was a shame, but they might choose Amazon to create, to build this this digital euro, and that's to be honest, that's a shame, because we don't have a stablecoin, euro stablecoin, because there's no liquidity at the moment, and they are saying this because there's no demand, but that's not true. We in Europe, we would be very happy to have a stablecoin in Europe, and now we have Circle, which is associated with Coinbase, so and invested by BlackRock, two US entity that are issuing stablecoin in euro. Now we have Amazon, with my build the euro, the digital euro, and that's we're talking about currency, and we're talking about sovereignty. I think that's a real issue. But CBDC is coming, and they're coming everywhere. So we know that it's going to be the next system. The next system is going to be created on CBDC. The way it's going to be organized, we don't know exactly, but we think that there will be like une chambre de compensation. I don't know how to say that, but they will be compensated within each other through, I don't know, maybe the BIS, the Bank of International Settlements, or maybe the IMF, possibly the BIS. But you see that Russia is now issuing a CBDC and is considering using them to pay what they have to pay with China. We have Australia who's releasing the white paper of their CBDC, and that's everywhere. China it does already exist, and now it's happening everywhere pretty fast. So we should see it maybe in 2 years. I mean the time of the bear market. So that's basically what. So yes, we have Debrief. Debrief is pretty interesting. I don't know if you know it. I could have mentioned this. It's pretty useful. It's the most important platform for options trading in crypto. So we have Bitcoin and Ether, and you can choose. You can choose your maturity, and then you have. So that's the max paying price. You have on one side the calls and the put, but so yeah, usually the price is getting closer. It gives you an idea to where the market is pricing the Bitcoin and the Ether at some, in the close future. So you can see in October, beginning of October, it could be around 19, so not very far from where we are now. And then so that's pretty interesting, and they just raised 40,000 million. But I'm very bullish. I mean, personally on derivatives in DeFi, FTX as well. I mean, the founder of FTX mentioned that they're all very bullish, and there is some very interesting projects at the moment that are just being released. And we have maybe also Polkadot. I don't know if you know this, but I mean, I mentioned it already. It's a very interesting crypto, and they're working on the relay chain. So that's it's getting similar than the Ethereum 2.0. It's basically the same. In Ethereum 2.0, we have the beacon chain, but that's the relay chain, and it's the security part of the. They ensure the security of the networks. But then you have all the parachains. The parachains are they are blockchains ecosystems, and but they are just using the same SDK, so a software development kit, and they are all connectable. They can action smart contract from one to the other. The idea is obviously to create an ecosystem of blockchain. It's very interesting. It's kind of protocol that is supposed to connect all the blockchain. But I think we have other protocol. I think Cosmos is more interesting, for instance. We could talk about it in maybe another time. And I was mentioning Polkadot because Akala, which is the first parachain on Polkadot, has been hacked 2 weeks ago, and should start again, and that's pretty good news. And also maybe Tether, the famous stablecoin, is starting on Polkadot as well. So that's a news. They've been sued, Tether, last week by the state of New York. There is a class action against them, and the court ordered that Tether released his reserve, because I don't know if you know how it works, but for stablecoin, stablecoin is very simple. It's the cash of the crypto ecosystem. You put $1 in the bank, and then you create a stablecoin. So a Tether, for instance, USDT. But when you want to get your dollar back, you burn this USDT. The thing is, the reserve, so all the dollars that are in the bank are supposed to match the number of USDT in circulation, and this is not the case. I mean, there's like I don't know, it was 7 years ago. The mother company of Tether has been hacked, so it was Bitfinex, which is also an exchange, centralized exchange, and they used the reserves of Tether to fund, and that's why now Tether is not. There's lots of mystery about the reserve of Tether, and most people think that there is not enough, assets to back all the USDT, and even if there is enough assets, it's assets like commercial papers, so assets that are not liquid, and or they are risky because they can move in value, and it's not the same as for USDC, for instance. USDC, it's only cash, it's 95% cash. So when you have a bank run, for instance, everybody's going to be served with USDC For USDT, it's different. There is only 4% of cash, so only the 4% first will deserve. The other one will be we'll have to wait in the best case. So that's basically what I could say. I don't know if you have other questions about all this.
Do you believe that side chains like Polkadot, once sharding on Ethereum will be available on layer 2, rollup will become more mature?
Sorry, can you repeat it? We've been cut.
No worries. So do you believe that side chains like Polkadot, Avalanche, Cardano will survive once sharding on Ethereum will be available on layer 2, rollup will become more mature?
Yes, yeah, I think there's enough room for everyone. It's gonna be, yeah. We still have 1.5 years, and you know, these Optimism, Arbitrum, Polygon, all these layer 2 are developing pretty fast, and they are giving a good services. I mean, obviously, if Ethereum 2.0 is efficient and I mean, it's coming not too late, it's coming fast. I think it's gonna be interesting. But for instance, Polygon is developing other, you know, in other area. It's not only a duplicate of all the application on Ethereum. They are really creating, like, for the zero knowledge. I think they are going to get specialized in areas once Ethereum 2.0 is live. But they definitely they are definitely going to survive. I mean, this is my understanding. But I mean, yeah, I think so. There's no, to me, there's no doubt. And if I can add, at least for the next bull market, we're going to these layer 2 are going to be interesting, I think. And you know, you also have, there's layer 2s, but you also have all these EVM compatible blockchains. So these Ethereum virtual machine blockchains, such as Phantom, Harmony, Avalanche, they are all, you know, compatible with Ethereum. I mean, they all have to be compatible with Ethereum, and they are all becoming compatible. You know, even Cosmos is not totally compatible. I mean, the code is not compatible with Ethereum. We have some bridge like FMOS, and they are all becoming you know, more and more connected. So and they are all, you know, compatible with Ethereum. So I don't see that as a major issue. I think they are, you know, Polygon to me and Phantom, they are pretty much the same at some point, and they are developing extremely fast. Sorry for my French accent. I know it was pretty strong. It was difficult.
Not at all, and it was a very good flow of information. So all the more a reason to sometimes let our French accent appear. Now it was really good. Thanks a lot. And
much easier for me in French.
No, it's very, very good. Thank you so much.
Thank you. Thank you very much for your time.
Yeah, everybody is really thankful. It was a lot of very great insights. I myself took a lot of screenshots, and I will have to go dig into it. Actually, we meant for everyone to please don't hesitate to follow our LinkedIn page, Blockchain HTC, and go to visit our website and our Twitter page. And we'll be really happy to have you to the next session. As you know, we are doing weekly webinars and sometimes physical events.